Whatever deductions, tax credits, things like that I take on the business, that's separate from the business and the personal. On the personal, I'm going to get my W-2, and then I'll also see what I get on the dividends and have to deal with those. Now, the option exists, and you've probably heard it on social media, that you can become an S-Corp. An S-Corp can be off of either a C-Corp, so you can start off as Stephen Young Plumbing, Inc., and then you can designate from a C-Corp. You can say, no, I want to be an S-Corp. Same thing with an LLC. I can be Stephen Young Plumbing, LLC, and then be taxed as an S-Corp. You have to file Form 2553. You're supposed to do it within 75 days beginning of the year, of your calendar year or your tax year. So by March 15th, you're supposed to have that Form 2553 filled out. Now, you can backdate it 2 years. There's usually some rules there, but the IRS generally accepts it. And throughout the year, you can still get them accepted. You just have to put on the form that, I'm sorry, this is late. This is why. And you have to give a reason. You sign it in a couple spots, fill it out. It's pretty simple to do. You can fax it to them, you can mail it to them, whatever, and they'll get back to you and say, hey, this has been approved or this has been declined and here's why. They generally get approved. It's not really that big of a deal. Okay, so now we have a separate tax return due March 15th. We have an 1120S for the S-Corp. So we have to complete that tax return. And then again, due March 15th, you'll get what's called a K-1. That's kind of like the W-2 for the business. So that K-1, so you'll have your W-2 from your wages, because remember, that's a separate entity. You as the owner are now an employee. You have to be on wages. So that's one of the challenges of being an S-Corp. I generally do not recommend becoming an S-Corp until you're making at least $50,000 net in the business, because there's some additional expenses to being an S-Corp that it doesn't really make sense to be one until you're making enough money that it helps. And we'll talk about why you might want to be an S-Corp in a minute. Okay, so we've got that K-1 and the W-2 gets issued. That tax return gets done March 15th. You do your personal return on April 15th. Now, in your personal return, if you don't have any other businesses, there is no more Schedule C. You've got your W-2, you've got your K-1 that you put on there, and that's your personal return. So your personal return's a little easier. That 1120S, that S-Corp return's a little more complicated. So they're generally more expensive, which is why, again, you want to make sure you're making at least $50,000 net. You can go a little bit lower than that, but for the most part, we're looking at about $50,000 is what I typically tell my clients. Okay, so why become an S-Corp? Because of a couple reasons. One, statistically, from what I have heard and seen, they get audited less than if you are just an LLC or a sole proprietor and you're putting all your expenses on the Schedule C with a personal return on the 1040. So that could be one reason why. The other reason is because now we're able to save money on the self-employment tax. So the self-employment tax is your Social Security and your Medicare, totals 15.3%. If you were an employee of Joe Schmo Plumbing and you're getting a W-2 from them, you are automatically paying 7.65% of your wages in Social Security and Medicare, up to certain limits, but let's just say that's what we're paying, is 7.65%. When you're a business owner, and then the business owner, Joe Schmo, he's also paying 7.65%. So you pay half, he pays half. On top of that, you also have your federal withholding, and depending on what state you're in, you have your state withholding as well. So there's the state withholding, federal withholding, Medicare, Social Security, unemployment, things like that the business owner has to pay, but let's focus on those 4 items, okay? So the FICA taxes is the Social Security, Medicare, again, 7.65% for the employee, 7.65% for the owner. So when you are the owner of the business, you get to pay both. So it comes out to a total of 15.3%. If you're a sole proprietor or an LLC, you pay that on everything, on all your wages. If you make $100,000 as an LLC, that $100,000 is going to be charged to you, and you pay $15,300 in self-employment tax, and then federal tax, and then state tax. When you are an S-Corp, and now you have to take a wage or a W-2. Remember, as an LLC, you don't take a W-2. You are not a W-2'd employee of this business. You're just simply a sole owner of the business. LLC, sole proprietor, doesn't matter. You're not taking a wage. You're not taking a paid check. So all of it gets taxed. S-Corp, we take a wage. Now, what is that wage? The IRS tells us that it needs to be reasonable compensation. What does that mean? We don't really know. They don't define what a reasonable wage is. So we have to kind of figure it out for us. Now, there's software that you can do that can kind of figure it out for you. But at the end of the day, what it really means is we need to figure out how much you should be paying yourself in wages versus how much you should be paying yourself in distributions. So for the wages side, you'll see some things on social media that maybe will say 50%. 50% of the business income should be paid out in wages, and then 50% of it should be paid out in the distributions. That really just depends. It depends on what the business is doing. If you're making $100,000 in net income, $50,000 in wages, or 50%, $50,000 might make sense. If you're making $1 million in wages or in net income, $500,000 in wages, that 50% doesn't make sense anymore. So it's not a linear thing. It's not 50% no matter what. So you need to be able to look at that. You need to talk to a professional to figure out what your wage should be. But let's just go with, let's say we're going to get taxed. We made $100,000 in business, and so we're going to take a wage of $50,000 or $48,000. Maybe it's $12,000 every quarter that we get reported. Now, you don't have to do a true paycheck like a employee would.